friends, I'm back with one more video. So today we will be discussing about the best strike and the premium selection for 1:1:1 ratio spread by taking the help of chart, and also if required we'll take the help of open interest. Alright, let me take you to chart. This is bank nifty chart. Whenever we enter into any strategy, be it credit strategy, be it debit strategy, market view is very important. So what I've done is current market stands here, right, at almost it is at 32,697. So what we have to do is sorry friends, so in case if you want to go for ratio spread, so this video is all about how to select the strikes or the premium for the ratio spreads. If you want to go for the iron fly, I already made a video on iron fly. If you look at one second, yes, this one, the best way, this thing, strike to selection on the iron fly. So this video is all about how to select the best strike for the ratio spread for 1:1:1. Okay, market stands here. So whenever we go for ratio spread, we have to identify two resistance. Okay, my first resistance is 33,200. This is almost like 33,250. My second resistance is almost 33,600. All right, so whenever we go for ratio spread, we have to identify the first resistance and the second resistance. I'm using the time frame 30 minutes because expiry is almost, today's Monday, so we have only 3 to 4 days of expiry. Ideally we should have deployed this trade on Thursday. The same logic works, though I'm demonstrating this example today on Monday, but even if this was Thursday, you could have deployed the same thing. Okay, so whenever you wanted to go for ratio spread, so this is the current market price and you have to identify two resistance. So this would be your resistance 1, right? This is your resistance 1 and this is your resistance 2. Okay, stay with me. Let me go to sensible. Okay, so what is the resistance 1, which is almost like, let me say what is my resistance, it is like 33,250. So let's take 33,200 round figure. I'll go to option chain. I'll go to 33,200. I'm just see, because we are bullish about the market, right? What is ratio spread? Whenever the market goes in the upside, you will get the profit, but not with the quick momentum, but slowly. Downside, you'll see downside anyways, it will be very minimal or zero loss. So we have two resistance, right? One is 33,200. So let me sell 33,200. What is the second resistance we have? Double click 33,600. I'll sell 33,600. Right, we are done in terms of selecting the resistance. Now what we have to do to convert back this to ratio spread, we have to buy one call. If I buy this call, 237 worth like 32,900, let's see what happens. The moment I buy this, you have loss of almost 1,356. If you're okay, you can select this strike, but if you're not okay for the loss of 1,356, in case if you have the view of market coming down, what you can do, you can just go to 33,000, just select 100 points OTM, that's it. The moment you do this, your loss is only 381. Now this is your ratio spread. You have one buy and two sold positions. What is ratio spread? 1:1:1. This is one buy, one sell and one more sell. This is your ratio spread. So your capital required is 33,485 only. Your maximum profit would be 4619. So on a 33,4619 would be almost, right, 12 to 15%. If the market gets trapped somewhere here, see, we are not discussing about this strategy. See, if you want to know about this strategy, what is ratio spread all about, I've made the complete end-to-end series. You can go for this video, so wherein I've explained about the logic about all the ratio spreads. So today we are going to discuss the best strike rates and the premiums for the ratio spreads based on the chart. right? Again, I wanted to reiterate, this horizontal line is the market where it stands. We have to identify two resistance 1 and resistance 2. So based on that, you sell this resistance and you sell this resistance, and you have to buy. That's what we have done here, right? We sold two and we bought one. So this is your typical ratio spread. If I enlarge this, right, you have only 381 loss in case if market keeps falling. Even if it goes like 5 or 10% down, down circuit, still you'll have only a loss of 381. But if market stands somewhere between this two 33,200 and 33,600, you have almost a range of, see, from 33,200 till 33,600. If market expires somewhere between this 400 points, you will get your maximum profit. See, again, I'm telling, I'm not going to discuss about the logic of the ratio spreads. Already I've explained each and everything in this series. You can just go back to my YouTube channel. You can search for ratio spreads and adjustments. All right. Now, so this is one of the way wherein you need to select the strike price. See, you cannot randomly go and deploy the ratio spread. You need to have the view. The reason why I wanted to have the view is, I'll tell one example, right? Let's say market slowly goes up, right? If it takes this resistance and if it even breaks this resistance, right, and if it slowly goes to the second resistance, so it might, probability is that market cannot break the two resistance, right? Probability is that resistance, this might act as a resistance and market might stay somewhere here, or else it might stay somewhere. So this is just the probability. So if this happens, you will be able to trap the market. So this is your first resistance, 33,200. Let's say the market goes up and up, right? Day 1, day 2, day 3, again it might go up. The probability of taking the resistance at 33,600 is high. So maybe if the market again takes the resistance and if it comes down, and if it plays between these two sold positions, you will get your 15% of the profit. And worst case, what happens, even if the second resistance is broken and if it keeps going up, sorry, even if it breaks your resistance and if it keeps going up, you have all your adjustments. So that's where I wanted you to see this videos for the adjustments. Today's session we are just going to discuss about how to select the strike price. Okay, now this is the way we have selected the sold position 1 and your sold position 2. See, you need to go with the market view. You cannot blindly go and deploy the straddle. So what we have done, we have identified resistance 1 and we have identified the resistance 2. Why resistance 1? There should be a logic, right? Because this resistance has acted, see, this acted as a support in previous, this acted as multi-level support, see, multi-level support. So don't you think the same, this support would act as a resistance here? Even if this resistance is broken, the second resistance would act as a strong resistance. Why this is a second resistance? Because see, you have one resistance here, you have two resistance here, almost three resistance. See, this is a consolidation phase, so this would act as a very strong resistance. So price might reject from here. If this happens, let's say if the price goes up, even if the price ends here, or else if the price ends here, second scenario, or else if the price comes and ends here, or else if the price comes here and ends here, so you will be able to trap the market into your green zone. So you'll get 12 to 15% on the capital deploy, because 3,300 would be 10%. So we almost add, that was like 12 to 15% profit within the ratio spread by selecting the appropriate legs and strikes based on the view of the market. And there is a small catch over here, right? So if you see, if you look at the range, you have 3.32% range on the call side, right? And you have 0.96 range on the downside, meaning from here. So your market has to move. See, if you want to see the profit, your market has to move 1%. See, friends, try to get this logic. Okay, let me zoom it out. Okay, if you want to see the profit into your ratio spread, market has to move 1%. So this is the area wherein you will start seeing your profit, right? So market has to move at least 0.98% within 3 to 4 days, and then it should slowly go up. That's where we take the help of this. See, market is standing here, so your expectation would be, so maybe market will slowly give a up move, and then it might touch this resistance. If this happens, if market slowly moves, and if it comes and takes your first resistance, so you will be at a profit of almost 4619 on the expiry day. Second scenario, let's say the market slowly goes up, it breaks your resistance, and it comes up, it takes the resistance here, which is your second call. Even if market comes here, slowly comes, it goes up, it breaks your resistance one, this comes and take a resistance at resistance 2, you will get your 4619 complete profit. Even if market makes a u-turn, you'll get the full profit. So you need to keep monitoring. Definitely you cannot just deploy the trade and leave it, you have to do the adjustments accordingly. For the adjustments, you need to watch my videos. All right, friends. The other thing is, like, if you're not okay with this 1%, if you want 1% issues, you need to adjust your trade. See what I'll do, I'll just try to see, check, keep a check 0.96, right? If I, what will happen if I take 33,100, right? See, if I take this thing, right, your complete trade has become green, meaning even on the downside you'll get with some profit, right? Even you but you have only 3.12%. Earlier, when it was 33,000, at least you had 3.32% safety. So as and when you're going above OTM, right? So no doubt your P side will become green, but your range will decrease, right? Your range on the call side will decrease. See, let me increase. See, from 3.2. So right, if you have a quick moment, you will get into loss. So the beauty of ratio spread is, I'll get back to original, the beauty of ratio spread is you need to have a very good view of the market. See what will happen if I go to 32,900. See, this will decrease. With the moment I went to 33,000, 32,900, see the chart. Now the distance between your current market and your break even is less, 0.7. So even if market goes like 0.78%, you will end up into your profit zone. Let's see if I go to 32,800. See, again this has decreased 0.64. But the other catch is you will start seeing more loss. See, initially it was 300 loss, but now it is 2706. That's it, right? Whenever you do some adjustments, there are like pros and cons. It's all about your view. If you are like bullish about the market, you should not even care about this downside, because you are sideways to bullish. Again, let me get back to, see, if I get back 100 points, your loss will reduce to 1356. Again, if I get you back to 33,000, right, your loss is only 381, right? This is the, but this break even will increase. So we are not again discussing about the ratio spread logic, I'm just telling you how to select this strike price. So let's say let's say you want to increase this range, friends. Let's say, okay, let me make it to, okay, let's say if you want to increase this range 3.32, right, you have to simply, what you have to do is you have to increase your selling position 33,600. You can just go to 33,700. See, I made 33,700. Your range has increased 3.6%. Even if I say 33,800, yes, your range has increased 3.87. So you have more safety on the call side, because ratio spread will start giving you unlimited loss when the market gives a quick momentum of 1%, 2%, 3%. So to increase the safety, you have to, if you want to increase the range on the call side, you have to increase, you have to go far when to bit OTM. So your strike selection should be 33,800, not 33,600. See, 33,600 we took based on the chart, right? Let me delete all these things. Okay, so this is, this second resistance line is 33,600. Based on that we took so if you want to be like safe, if you want to take this strike like 100 points above, right, you can just go 33,700. So this range will increase, but your loss will also increase. See, 600. Now the moment again, if you increase to 100 points, your loss will increase here. See, from 600, from 300 it came to 600, from now 600 it came to 856. Yes, your range on the call side is increasing, and also your break even is also increasing. So market has to make a move of 1% in another 4 days, so then your profit will start showing up. If market stays here, you will have only 856 loss. That's it. If market stays here also, right, I mean, already I've discussed many adjustments in that. You can just shift this call inside and inside and inside, so that this side will become green. Again, I'm telling you, for that you have to watch these adjustments videos, right? Ratio spread is a very good strategy. If the market goes up, you'll get into profit. If market stays where it is, or if the market keeps going down, you have to shift your second sell position, this second sell position, like 100 points inside, 100 point inside. So whenever you do that, you're booking the profit and you're going inside. So this entire p side will become green, okay? But your view is bullish, and in bad case, if the market is going down also, you can make your downside, right, profit also by shifting this second sell position, like 100 points inside and inside. As and when, let's say the market goes 100 points down, shift this call to 33,700. Again, if it comes to 100 points down, this should be 37,700 to book that, and shift it to 33,600. As and when it is moving like 100 200 points, you start shifting your call by booking the profit. All right, friends, so we have seen how to increase the range, we have seen how to decrease the range for your actual profit, and also we have seen how to deploy, how to select the strikes and premiums for your ratio spreads. Do not blindly go and select the legs or strikes. So you have to, because you pretty well know that this is the resistance for you, right? Let's say you entered here, right? You pretty well know market will go up, it can reverse, right? Or else market can break this and it can take a resistance and it can reverse. So either way you will be into profit, right? If market goes down, you have only minus 300 rupees loss. So you can cover this minus 300 loss by shifting your second PE position. By you can exit this leg and move it to 100 points down, that is like 33,500. Again, if market goes 100 points down, you have to exit this, roll down your C to 100 points down. Again, if it keeps going down, just roll down by exit this trade. And even if the market gives a U-turn, you will trap the market into this green zone, because you still have the potential of your maximum profit. All right, friends. So I'll just let me quickly give a time check. So we are 17 minutes, so we have another 3 minutes. You got my point, right? The main purpose of making this video is in terms of how to select the strike price and the premium, right, for your ratio spread 1:1:1, right? I'll start making all the videos for your 1:1:1, for your debit spread, for your iron fly, how to go for butterfly, right? If you watch all those videos, you'll get a clarity in terms of deploying the right trade. But again, I'm telling you, you have to be like very thorough of your wicks. You should know where is your wicks going. Okay, without, see, I'm just telling you based on the chart analysis. And one more thing, right, I've told you, right, the open interest also. So let's check the bank nifty open interest. So what were the two? 33,000. What were the two calls which we took? One is 33,200 and the other one was 33,600. This was the original fly, 33,200. So let's see what happened on the intraday. 33,200. That's it, right? Yeah, 33,200. Where is 33,200? See, let me take you to the historical 33,200 call. Okay, let me take you to 33,200, this one. See, there is a good amount of OI built up on the 33,200, and the other one was 33,600, right? This is your 33,600. Even you have a good decent open interest built up at both the strikes, the one which you have selected for your ratio spread. Look at the historical 33,200, right? Very good built up, right? Historical, and 33,600, right? You have a good breakup. So either you can go for 33,500 also. See, end of the day, it's your view. See, I would not say, even if you look at, there are like too many option sellers like call built up at 33,500. So rather than selecting 33,600, you can select 33,500. See, 33,500, your range will become, see, this will become complete green, but your range, but rather I would say you need to be you need to select this strike would be the perfect 33,600, because if these many FIS or the big players are, right, losing their trade, so then your turn comes, so you are treating them, you're putting them as a defensive, right? Because if market goes up, so it has to hit this strike price, so then comes your 33,600. So you can take 33,600 as a conservative trader. If you are an aggressive trader, if you don't want to give that 100 points, you can just go for 33,500. So this way we need to do the analysis. So what we have done, we have done the analysis, we have what do we say, this one. So we saw the strike and the premium selections based on the chart and also based on your open interest. All right, friends. So thank you, friends. Thank you for watching this video. Please subscribe my channel.